We brought you on to talk crypto, Anthony, so let's talk crypto. And this week, we've been talking a lot about the notion of stablecoins and specifically Circle's U.S. dollar coin. We talked to the CFO of Coinbase. We talked to Jeremy Allaire over at Circle. We talked to Bob Diamond, whose SPAC is taking Circle public. The notion that it was marketed at one point as $1 US for one US dollar coin, and how that's not necessarily true. They pivoted in terms of the message and releasing a report in terms of what assets are backing that US dollar coin. In your view, is there any element of risk to the financial system? Could we see a situation in which one US dollar coin is not worth $1 US? How concerned do you think we should be?
Well, the first thing I want to do is I want to applaud the reporting on Squawk Box. I think Andrew asked great questions. I think we've gotten to the bottom of what the issue is. Many of us remember the money market crisis in 2008 into 2009 when the money market dollar peg broke. And so we should be concerned about this. I'm glad it's getting cleared up. This is still the early frontier of decentralized finance. But I think the good news, Melissa, look at what happened in the month of May. We lost 40 to 50% across the board, whether it was a Bitcoin or other coins, and yet there wasn't a commotion. Imagine if $1 trillion got taken out of centralized finance and impacted the banks, or was targeted on our great regional banks, or so forth. And so for me, the decentralization of this community is very powerful, and it's offering a risk diffusion. And I think it's important for regulators to understand that as well. So yes, we should be concerned about it. We have to tighten it up. They have to be more transparent about what they're doing. But I don't see the risk there as a result of this massive decentralization.
Hey, Anthony, you don't think that some of the volatility that we've seen, it wasn't that long ago, again, that Bitcoin was under 30, albeit just slightly, and now it's had a great bounce back, that just puts some people off, and not just novices either. There are a lot of longtime pros in the same ilk of some of the names that you've mentioned who are negative on crypto, and one of the reasons is because of the extreme volatility, among others. It's not, everybody who's been on Wall Street for a long time is not on the same side of the boat on this issue.
Well, listen, you're right, Scott. It is an emerging market. It is an emerging asset class. I'll take you back to the late 90s when Amazon came public. It came public on May 15th, 1997. A $10,000 investment in Amazon at that time is worth approximately $21 million today, if not a little more than that. And yet Amazon was subjected to probably 8 or so moves where it was down 25 to 50%, one move where it was down 80 to 90%. And the point being is Amazon was growing and scaling pursuant to Metcalfe's law. There were lots of fear and uncertainty and doubt. There was even a Barron's cover story that said Amazon.bomb. But look at Amazon today. And I think if you look at Bitcoin, it's in its early innings. There's about 125 million people that are part of the Bitcoin universe, 46 million or so in the US. If Kathy Wood is right, and I believe she will be, there'll be 1 billion users of Bitcoin by the end of 2025. And I just want you to think of the magnitude of that. There'll be lots of volatility, but take a step back from that chart. It's mostly asymmetric upside volatility, but you have to ride that wave if you believe this story and the effects of Metcalfe's law, the networking effect associated with Bitcoin.